Welcome back to the Collective Shift channel. Today we'll be discussing our new altcoin report with our head of research, Matt. This report is a type of content that's only available to our pro members and is a type of content that helps them make better and more informed decisions. Welcome, Matt. Maybe you can take it away with the number one takeaway you had from the latest altcoin report.
Yeah, sure, Nick. It's been exciting to bring this new report at the start of 2023 to our pro members. So yeah, once a month, we really get together and go through our 5 or so altcoins that have been yes, moving in price, but then also fundamentally making some really major changes in respect to the roadmap of these particular projects. And one of them, for example, that we covered this in our most recent report and that we'll focus on here today is Lido. So as you can see in the report here, a breakdown for pro members real succinctly, what is going on and sort of where we think, why we think they should know about it or be aware about it, how it's going to, in this case, help the project, and ideally, at least in my opinion, will actually, help sort of drive value in the long term to the LGO token. So, Lido, just to quickly just summarize it, Lido is, a liquid staking protocol, mostly on Ethereum. So, liquid staking protocols, they let, people just like you and me, basically deposit our ETH, in this case with Ethereum, deposit our ETH into Lido. It's a liquid staking protocol. We get back, we deposit our ETH and we get back, the equivalent, basically a token, a liquid token, hence sort of the name, that we can then use in other areas of the, in this case, Ethereum ecosystem. So, you can use your liquid staked ETH in areas such as decentralized finance. So you can go and, deposit that liquid staked ETH into a lending pool and earn some additional interest on it, for example. That's sort of been a really common sort of major trend that's been really taking off in crypto in the past, 6 to 12 months, and something that Nick and myself have talked about in many sort of town halls, and even recently on YouTube we sort of talked about it because it was one of my sort of predictions for 2023 that this year will be all about staking, and liquid staking would be a big part of that.
Awesome. So what in particular about this new upgrade for Lido allows it to potentially maintain its market share or remain as one of the most dominant pooled staking option out there?
Yeah, I think as I sort of touched on in the report, they did announce V2 earlier in February. So, the second version of Lido, which the team has been working on for quite some time. There has been this criticism of Lido for a while that, it's way too centralized given how much power it has. For those unaware, its market share is, vast when you're talking about just all of the staked ETH sort of, in the world, their percentage responsible for that amount is about 30%, which is like quite enormous. And then within the liquid staking market itself, Lido, accounts for, the vast majority of the market share in that market. So, I think with this V2 upgrade, it's really sort of going to transform and help Lido basically become, really quell those fears about it being too centralized. How are they doing so? They're really going to basically overhaul their architecture of the Lido protocol. So they're calling it, modularizing the protocol, which is, a hot word we've heard in other areas of the crypto space this sort of year. But with respect to Lido, what that means that they're modularizing it is really they're going to try to make it as sort of accessible and composable, basically to let other types of stakers be able to, contribute their stake to Lido and participate as a validator. So validators, big point of criticism for Lido is that they currently only have 29. So, a big people don't really know this a lot of the time when they are criticizing Lido. They picture it as just sort of one entity. To their, not to their credit, but to be fair to them, it is 29 sort of validators that sort of are responsible for that 30% or so of the staked ETH. And, they've slowly been increasing that over time. But what their hope is with this launch of V2 is this will actually allow them to get up towards like 100 validators pretty soon. And then once you see some other technologies such as distributed validator technology, or DVT, Lido is working with sort of some of those projects, and they, in their opinion, they believe this will actually be able to help them scale up to like the thousands of validators participating in the Lido protocol.
Awesome. So I guess high level, it's just really important because it helps Lido quell some centralization fears and hopefully allows it to increase the number of validators and be more resistant as well. So I guess I'd be keen to hear your thoughts on whether it'll remain as the market leader. We've heard a lot of thoughts about potentially Rocket Pool coming up because they've had a recent announcement that they're going to reduce the amount of ETH that is required to make a node for these quote unquote like mini nodes, especially other competitors, that are out there in the market. Where do you see it sit? Do you think it's just continually to have this first mover advantage in the market?
Yeah, Nick, I think the horse has bolted, so to speak, in this case. Like, I think they've just consolidated such a strong position out of the gate. It's just, I have a hard time envisaging a situation where they're surpassed by another up and comer like Rocket Pool or Stakewise or Swell Network. There is some outside really risks that could be the case. Maybe V2, even though they're getting it audited by 7 independent auditors, which I can't even imagine what the cost of that would be. But, there is that outside risk that, hey, a major exploit is found, even after their audits, which definitely happens a lot in crypto. Maybe that could be some really external factor that really, ends their reign as the market leader. Some other things could be regulatory risk, the core team. Whilst the SS29 validators, there is a really core team that, if the US, particularly the US entities or regulators, were particularly in a bad mood and, really in a state to sort of be very unfriendly towards crypto, they could, arguably target that core team. And again, that would cause Rocket Pool, the other Stakewise, Swell Network to really gain significant market share in that case. But they are some very low probability events still possible, but I just think they've just got way too many resources, both in terms of capital. Their treasury is enormous, as I think you've reported on previously, Nick. And then also just, the resources then comes from a human standpoint, just the amount of team members and I guess combined knowledge of the team, and then the contacts you then get from working with different professional stakers, exchanges and whatnot. I just think the horse is bolted.
Yeah, it's interesting one. Especially because I think when we're looking at the amount of stake that is at the moment locked in Ethereum, it's only about 14%. Compare that to other cryptocurrencies, they have upwards of 50, 60, 70. I read a report that was saying that the industry standard or average for stake is 50% or something to that tune. So Ethereum still sits well below the amount of stake compared to other proof of stake systems. Maybe I'll get your thoughts here, because my initial feeling is that maybe it's a many winners situation, that Lido has or could maintain that lead, but perhaps the lead may diminish a bit. But I guess if overall we have a much bigger staking ecosystem out there, it's not necessarily a bad thing, I guess, for Lido in the short term, even if that gap is reduced a tad, because I'm expecting the stake to be upwards of 20+% as soon as withdrawals are activated, considering that now people don't have that risk that their ETH is locked forever in there and the uncertainty is gone of whether there's going to be a bug in the withdrawal contract or anything in that regard. You sort of feeling that the market overall is just such a big one that Lido's can probably cope with one or two competitors?
Yeah, that's an excellent point. It's thinking, that concept of growing the pie for everyone, and it's in absolute terms, Lido may continue to grow, but maybe proportionally to its competitors, they might shrink a bit. And to your point, I agree that it would still be a net positive for Lido, even if they do give up some market share to the likes of, those names we mentioned earlier. So I think we both at least agree that, it is really looking likely that, that percentage of ETH stake will trend up, to 20% and then ultimately past 20% into maybe even the 30s in many years time, which again is just like another sort of reason why you could see value sort of accruing to the LDO token, which really is like used for governance and governance over the treasury, and then voting on parameters of the actual sort of Lido protocol itself. So again, as more value is deposited into the protocol, those LDO tokens get, significantly more like important to hold. So that's sort of like where you could see the value sort of prospects there for the LDO token, even if they do sort of lose some market share.
Awesome. Well, thanks for chatting with me today and going over this altcoin report. Look forward to coming together in the next one. Hopefully we can highlight another cryptocurrency that really piqued our interest in the monthly report. So for anybody who doesn't have access, this is only available to Pro members. So head to Collective Shift to read the full report and sign up to a Pro membership.